Good afternoon if you're in the Midwest and in the South, and then good afternoon again for all the East Coast people. This is Dante Royster with Epic Lunch and Learn. I am here by myself today. So we're going to try this out. I need your help. Let's get through this. It's an hour of let's just bring out the knowledge and the wisdom, and let's talk about answering some of the questions that you may have. Okay. So this episode today is sponsored by Epic Mortgage. Whether you're buying, refinancing, or investing, call Epic today. That's 708-905-5300, 708-905-5300. It's your dreams, your goals. Let's plan together. Now, we do have the Ultimate Mortgage Guide. It's right over here. As Vince made me do this, Ultimate Mortgage Guide. It is available on Amazon. Definitely go grab your copy today. It isn't just a book, it's a blueprint. It's a blueprint for turning your mortgage into a wealth building machine. It's perfect for buyers, sellers, and investors. It really is a 20 year at the time frame compilation of just a lot of questions. What's amazing is I started in this business June 24th, 2002. June 24th, 2002, I started in this business. And so I get the same questions sometimes, even now. And today is August 19, 2025. So I said to myself, hey, if I'm getting the same questions, this stuff is not being taught in the public schools. It's not being taught in the private schools. So let me go ahead, put a book together, and let me give you some of the information that you're not getting in the schools. And that's how I created the Ultimate Mortgage Guide. So please check that out. It's available on Amazon. Once you're done listening to me for an hour, answer these questions and scenarios, please check out the recent Epic Spotlight interview with 𝐒𝐿𝐓𝐇. She's a family therapist. She was incredible. We had a great conversation about family dynamics, about relationships, love language. It's really interesting, a great topic, especially for once you have the house, what happens inside the house. So definitely check that out. That is, right there on our YouTube channel, Epic Spotlight. So 𝐒𝐿𝐓𝐇 is our most recent episode. So check that out as soon as you're done here. Let's go off the preferred listings. We got a new one today as well. So let's go over the preferred listings. We have 2436 Planters Mill Way, Conyers, Georgia, going for $399. It's a 4-bed, 2.5 bath. Contact Angela Pinnell, 404-425-4660. We have 1100 South 3rd Avenue, Maywood, Illinois. It's going for $405,000. It's a 5-bed, 2-bath house. Seller is highly motivated, and they are offering closing cost credits. Contact Tamika Bishop, 630-479-6352. We have 8228 South LaSalle, Chicago, Illinois, $250,000, 3-bed, 1-bath. Contact Amico Pope, 808-428-3770. We also have 5544 South California in Chicago, Illinois, $394,900. It's a 5-bed, 3-bath house. Contact Victor Naranjo, 708-830-4734. We have some commercial space. A lot of people don't realize that we do commercial here as well as residential. We do commercial property. So we do some commercial lending. We have a storage space available going for $165 at 1413 East End in Chicago Heights. Contact Amico Pope, 808-428-3770. We also have a commercial space. It was once a Burger King. Then it was a title company. What's next? It could be a hookah bar. Contact Keith Terry. This is for 1645 Western Avenue, Chicago Heights, going for $339. Contact Keith Terry at 773-655-1360. We have this is one of my clients. He's selling a property at 14327 Lincoln Avenue in Dalton, Illinois. It's going for $225, 3-bed, 2-bath house. Contact Evelyn Woods, 773-718-9742. We also have some condos. I'm going to show some love to condos. We have 6945 South Dorchester Avenue, Unit 2S. Once again, contact Evelyn Wood, 773-718-9742. We have 548 East 50th Street, Unit 3, Chicago, Illinois. It's a 3-bed, 2-bath. That's a big condo. Contact Jessica Roberson, 708-722-5106. And last but not least, we have an investment guru. This is an opportunity, a nice little renovation rehab. 7723 South Honorary Street, Chicago. Contact Brittany Davis, 773-971-8714. All right, that's our news and notes for today. So that all those properties should be available on my website at www.danteroyster.com. That's www.danteroyster.com. So definitely go on the website, check out those properties if you want to, get a look see. But great opportunities. These are preferred listings that we're preferred lenders on. We can help you get that yes to your offer. I know a lot of people are out there want to know, did I get my offer accepted? So things are still moving. It's so funny. Sometimes, I learned a long time ago, sometimes it's hard. You can't listen to the news. The news at times can be misleading because, they're speaking of macro situations, but not necessarily micro situations. Micro might be just where you live. I'm still seeing movement occurring. I'm still seeing people buy and sell. Given perspective, I was doing a talk and I was talking about just Illinois. And I just used Illinois as an example. I said in like 2000, I believe it was 2023, Illinois had sold 39,000 real estate transactions, 39,000. Now, I guess on a bigger scale, that may not be per se, great, but still 39,000 people moved within Illinois. So I think there's great opportunities. Don't get derailed by what you hear necessarily on the news. You really have to kind of set your own path and move forward. Today, I don't have any co-hosts or guests, so I need you guys to help me work through this. Let me answer your questions. This is a hotline. This is availability to maintain knowledge and wisdom for you. I came up with a topic today just to keep us on point, and the topic was going to be about delays. A lot of times people are receiving delays and they're saying, hey, why are there so many delays in the mortgage space? Well, let's go back to the original premise. I think the original premise is these purchase contracts. Let's just talk briefly on purchases. So you go out and you want to buy a house. All right. And you see that house is worth $300,000. Now you don't have $300,000. And so what do you have to do? You have to get a loan for that $300,000. Now that loan is called a mortgage. And generally speaking, it's changed over the years, but generally they've been offered at a 30-year time frame, right? So 360. So the goal is that, hey, you're going to basically pay 360 times to pay this off. And in doing so, that's paying down the principal. In doing so, you're going to also pay interest. And so that interest is going to be accrued over those 30 years. And that's how banks make money. Okay, so, and that's one of those situations where you see, hey, I took out a loan for, 290,000, but it looks like I ended up paying 548,000 because not only did you pay off the principal, but that's all the interest that accrued over that same time frame. So one thing you can do, just and this is more of a tip, one thing you can do is look to try to include principal payments, pay additional principal payments each month. So you can knock down the term as quickly as you can. So even though you have a 30-year mortgage, you still have the ability to pay it off quicker. And that's what we try to solve for. Looking at an amortization schedule, it breaks down how much principal you're paying on a monthly basis, and then you see how much interest. And generally, when you start a mortgage, you pay more interest than you do actual principal. So, I mean, for quick numbers, if you have, I don't even know, for quick numbers, let's just say if it was a $800 payment, $750 goes towards interest first, and then $50 goes towards principal, and then the next month it's $749, and then it's 51, 52, and so on and so on. So as the years go on, more of the money gets shifted over to the principal side than the actual interest side. So you do pay more in time. Now, with some of this, situation, some people, out there say, well, I don't want to buy. I don't think buying is great. But, remember, buying is an asset. And over time, it produces. There's only been about 3 years that we can know of since 1950 to 2025 that we had negative appreciation. I mean, the norm is that it's always going to go up. So it's an asset. Obviously, are there other things that can grow faster or higher per se, yes, of course, stocks, investments, and stuff like that. But real estate is tried and true, and over time that appreciation. But you got to give it time, and how much time to give it. It depends on where you're living, but you're looking at any situation of anywhere from 10 to 20 years. You'll see the power of real estate. Okay, so let's talk about in real estate. I think that we have with delays, and what I'm going to say, I got to put it on you. Yes, you the consumer. We have delays, and it's not your fault per se, because once again, I always say, hey, schools, we're kind of learning off hearsay what someone's experience is. It's almost like a lottery. What's your last name? When were you born, and who were you born to? There's some things you just can't control. And so the thing is, we one of the things that we struggle sometimes with when consumers are borrowers' documents. Obviously we have a time frame. So getting back to that purchase contract, the purchase contract gives a specified date of when the buyer, mainly the buyer's agent is wrote out the contract. The seller's agent explains the contract to the seller. The seller signs off, the buyer signs off, and they give this projected date. And now the projected date is what a closing date would be. And it's basically saying, hey, we would like to close on this date. Now, most times buying agents, they don't call me and say, hey, Dante, when will you be ready to close? They just kind of go off their experience level, their knowledge, and just say, hey, I'd like to close on this date, or this should be enough time, right? They give that assumption. Maybe they had a previous experience with maybe somebody else, and they just assume, hey, this should be enough time. Now, in theory, we all like to close within 30 days. Some lenders out there have really pushed like, hey, I can close in 2 weeks, which is great. I don't like to promote that per se. I mean, can it be done? Sure. But everything has to go right. And it's sometimes hard to make sure everything goes right. I mean, when you think about a purchase transaction, there's probably about 10 people in a transaction. Let's count them out. We got a buyer. That's number one. We have a seller. That's number two. We have a buyer's agent. That's number three. We have a seller's agent, number four. We have to have a lender if it's not a cash deal. That's number five. We're probably going to have a title agent, a closer, title, to prepare title, make sure there's no outstanding liens, that everything's going to get paid off. Six. If we're getting a loan, we have to have an underwriter. Underwriter is going to review your file, make sure you have all the documentation. They want to make sure, do you have the ability to repay back this loan? Will you be able to? They're going to verify your employment. They're going to make sure you have enough assets to close. They're going to want to make sure, that, potentially depending on your credit score, they want to verify your rent. Have you been making your payments on time? Are you a good borrower? That's as simply as put. Then you're going to, once the underwriter says thumbs up, then you're going to have a funder. They're going to move it to the closing department. The closing department is going to review your, make sure all the numbers are, and work with the title company to make sure everything balances and that the wire is sent out. And then in litigious states, you're going to have an attorney, a buyer's attorney, and a seller's attorney. So literally 10 people are on a real estate transaction in a litigious state. In a non-litigious state, now litigious would be Illinois, obviously, but in a non-litigious state, let's just say, Colorado, Florida, Maryland, these places, at least 8 people. So everyone has a responsibility. Everyone has a job description. And if someone's not, working it, it can delay a process. It can create, issues along the path. Everyone's coming from different experiences, in different situations. Some people are super busy. Some people are coming off a vacation, mood swings, what have you. I mean, there's just real life that occurs, and we're trying to get this transaction, from A to Z done, and everyone has to play their part. So, it is a lot of landmines that can, create a lot of ruckus through the journey of buying a house. and I wanted to make sure that you're aware. But it starts with the borrower. You have to, generally speaking, you have to have 2 years of income. So as of right now, for people that are trying to get pre-approved for a mortgage today, we're going to be evaluating. You're more than likely going to close in September. Sometime in September, you're going to close on a deal. And so for you to close on that deal, we're going to be looking at September 2023 to September 2025. Where did you work? So even if you worked somewhere for a month or 2 months, or it was a temp agency, I still have to verify that. I have to verify where you worked. Now, in FHA, if you didn't necessarily have a job, maybe you were unemployed or you were on workman's comp, whatever the case is, I can go back in time. I can definitely go back in time and try to verify previous employment, but I have to accumulate 2 years of employment history. And that's very important for you to know. So keep that in mind, a 2-year work history. And so how do we verify that 2-year work history? Well, generally speaking, it's going to be with W-2s or tax returns. Excuse me. So for W-2 employees, we have what is called a W-2 only program, which is really unique. It's special. Mainly brokers have it, where we can, just for quicker documentation purposes, I don't have to get into the weeds of your taxes and your tax returns. I can just use your W-2s to help you qualify and just move the process along, just to save you time for accumulating all the documentation. Now, you do have an ability to do what is called an extension on your taxes, right? So for individuals and people that are, independent contractors, they have ability to do an extension all the way through generally October 15th. So October 15th is the final cutoff day where you're going to have to file. And so for that being said, when you do that, that means that I can accept, in theory, your 2022 and your 2023 W-2s. Well, strike that. If you're an independent contractor, I can use your 22 and 23 tax returns all the way until October 15th. If you're a W-2 employee, then obviously I'll just take your W-2s from 24 and 23. That's what I would be asking for you right now, along with the last 30 days of pay stubs. Okay, for some of you, you get paid once a month. Others get paid bi-weekly. Some get paid semi-monthly. Others get paid, did I say weekly? Maybe I did. Once a month, weekly, semi-monthly, bi-weekly. Okay, and these are the ways people get paid. And so I'm going to need a 30-day, of your pay stubs to evaluate your income. Now, if you've been watching this, as you know, I always talk about CIA, credit, income, and assets. Those are the 3 components it takes to help you get qualified for a mortgage. What is your credit? Your credit is going to dictate the products and programs that are available to you. What is your income? Your income is going to determine for how much. How much money do I need? Well, based on how much I can get you qualified for, we can start guesstimating, numbers. But as I just mentioned, when you have 8 different people involved in a situation, I may not have exact numbers today. It may take me time as these new information is coming from all these different people. Then I can start figuring out, okay, this is how much I think you'll have to bring to closing. And that has been, this summer alone has been very difficult for people. I've dealt with a lot of people that are very concrete. They want to know exactly how much money do I need to bring to closing? And it's like, well, I don't know. I don't know. Relax. I don't know. What do you mean you don't know? Well, I have to get this information. I have to get how much is your homeowner's insurance going to be? What is what is the property that you're buying? How much is the purchase price? What are the real estate taxes? Who's the title company? Generally speaking, depending on the state, in Illinois, I'll use them. The seller's attorney is the one that selects the title company. So I don't know who the title company is going to be. I don't know if it's going to be Chicago Title, Fidelity Title. There used to be Tycor Title. Is it going to be Assure? Who's the title company? Based on the title company, I'll have some numbers. And sometimes they look at me and they recognize, like, I'm being honest. I'm being sincere, honest. It is what it is. I don't know. And I know there's a lot of sales guys out there, guys and gals, they speak with so much conviction, but it's like they don't know either. They're guessing just like I would be guessing. These are estimates. And as we get closer to the end, all the puzzle pieces, I can put them together and get you that real number. And I know that's what you want, and I want to give it to you, but I got to get the information first. And in fault, you can fault me because I'm a Virgo. And if anyone knows Virgos out there, horoscopes, you guys know that I like to be accurate with my numbers. I like to be precise. I don't like to just give vague, roundabout numbers. It's bit me in the past, and so that's where I try to pride myself on giving you the real number. So when I send you that text, I say, hey, the estimated payment is going to be this, and the estimated cash flow is going to be this. I'm going to be right there. I'm going to be very close to that final number. I'm going to be on the money because I don't play around when it comes to numbers, because that's important to you and I respect that. But to the point of buyers having this expectation, just like when you go to the store, right? You go to the store and get a gallon of milk. How much does a gallon of milk cost nowadays? I don't even know. but if you go to the store and get a gallon of milk, and you see the price and it says $4.39, right then and there, okay, that's how much it is. But ultimately, that's not how buying a house works. I'm sorry. It's still old, tried and true. We talked about this, in one of my monologues. If you go to YouTube, our if you go to our YouTube channel is Epic Spotlight, and what I do on Fridays is I come out with a monologue. It's probably anywhere from 5, 10, 12 minutes long, where I try to answer a question, put some levity to it, but real information. And about that is a situation, I basically, as far as buying a consumer, it could take you literally what, less than 10 minutes to buy tickets. I was talking to my mom last night, and she was talking about how she bought Alicia Keys tickets. She's got a play, Hell's Kitchen or something like that. So that's coming out, and she bought tickets. Took her 10 minutes, and it could take you 10 minutes to get airplane tickets. Who's gonna go to Vegas and watch the Bears play the Raiders? But then it takes a little bit longer to get a car, right? You go to a car lot, you got to look at cars, you got to sit down, deal with the financial manager, the finance manager. If you have credit challenges, maybe they have to pull multiple times to try to get the score where, and find the vendor of choice that's going to work with you. It could take you a half a day to buy a car. But a house, man, that's 3 to 4 weeks, all day, every day. Just going through the process, getting through the underwriting, waiting on the appraiser. We didn't even talk about our appraiser when we talked about the transactions. So these are the types of things that, there's process. So, once again, having your documentation is very important. All right. Having your documentation is very important. And also too, some people, they have an expectation. Banks have an expectation for who you are and what you do as a living. So their expectation is that, let's say you're an employee, you get paid biweekly, right? So every other Friday you get paid. Okay. So they have an expectation that, hey, you get paid and then you get a check. So when they look at your bank statements, they're expecting that they see 2 deposits, right? 2 deposits, and that's it. Nothing more, nothing less. Now, we're the ones that create gray. I was talking to somebody yesterday, and they were like, I just like everything black and white, Dante. I just like everything black and white. And the reality is, we're the ones that create the gray. We're the ones. We create the gray, because sometimes we got that hustle in us, right? It's not good enough to get those 2 deposits. We want to get more deposits. So maybe I bake cakes and I sell cakes, or maybe I make some good money, and what I do is I give some money to my family, and then now they got to pay me back. Or I'm involved in some group program where we all pitch money into a little pot, and then we pass it around. All these things, potentially can take place. All these things do occur. And that's the gray that as humans we create. We just create this gray of, we don't just live a certain way. Now, for the ones that do live that way, where they have 2 deposits every month religiously, and then they just hey, here's my checking account. I have my 2 deposits, and then I'm going to break that money into some goes into my savings. Some is already, going to be automatically deposited into my Roth or my 401k, what have you. Those are cookie cutter situations. We love you. The lending industry, we love you. That's what we want. That's easy. But for the others, I still got love for you, but you're going to make me work. Well, I got this money from this person. They owed me some money, so now they pay me back. Or I just told them to hold on to it. And then now that I'm trying to buy a house, now I need you to pay me back. These are situations that create a lot of like, okay, well, how do we explain this? What's the proper channels of explaining this information? Because, well, can we view this as a gift? Is this a gift? Is this from family? Is this immediate family? Who is this? A lot of things kind of come into question, and we're the ones that make it gray. So a lot of delays starts with you. You're the reason why we're delayed, because now we're trying to unravel a situation. Now, once again, I don't think it's your fault. No one told you this when you were in high school. No one told you this in college. So you didn't know. So if you're a first generation homeowner, meaning that your parents never bought a house, you didn't know. Now, I will say I spoke to somebody, and obviously I speak to people every day. I spoke to a guy yesterday. He filled out the application. I'm going to be calling him later today. Really, 29 years old, right? He's 29 years old. Him and his fiance are ready. Both are doing very well, and they want to buy a house. And they come knocking on my door. And we were having a good conversation. And one of the things that he brought up was he brought up the concept of just YouTube and social media. And so much what he has learned is just through these channels. Now, me growing up, I didn't have that. And I didn't have that and a lot of people didn't have that, right? If you were born anywhere from 1980 and beyond, before 1980, we didn't have that. That wasn't a thing. That wasn't an opportunity that existed in our life. We didn't have that. And so that is something that we've kind of had to overcome. But to some degree, the excuses are getting smaller and smaller because it's available to you. Now you just have to seek it, right? I think of The Matrix. You guys remember The Matrix with Keanu Reeves? I'm a movie guy. Sports and movies, they're usually you're right in my wheelhouse. And Keanu Reeves, he plays Neo in The Matrix, and he's like, "Oh man, I learned karate, and I learned kung fu." They kept plugging into him all these abilities to fight, and he had the ability to learn things rapidly. And obviously that was fictitious and that was a movie, but to some degree, that is where we are now in the world. We have this ability now because of YouTube and having the ability to communicate with people. We can learn things that we didn't know, and people are willing to share with us. Why do you think I'm here? I'm here to share my information, things that I've learned in 23 years, and I'm giving it to you. I'm giving you the ability to learn something about an industry that you didn't really know about, and now you're like, oh, now I know a little bit more now. I'm more privy to having an understanding. The curtain has been moved over a little bit for you to be able to look inside and see, so it doesn't have to be so daunting task. It's been such a daunting task for people, and people have been intimidated of buying a house. A lot of ethnic groups are still struggling with, overall, not even 50% of certain ethnic groups are homeowners. And that's a problem to me, and that's why I'm here. I want to debunk some of the mystifying myths, and let's move forward on, getting ourselves together. Getting ourselves together is making sure that we're buying assets. We're building out portfolios before it's too late, because the one thing that, separates all of us is time. And the sooner we start doing this, the better we can be. But if we're not ever starting this path, then these are issues that, just continue to perpetuate within our families. It's great that one family figured it out, but now we need the masses to figure it out. And it all starts early. It's early information and then inputting that information into action. It's like you have to obtain the information and then 1, 2, 3, go. Obtain the information, 1, 2, 3, go. You got to move forward. Life is about moving forward. You're going to have challenges, you're going to have struggles. Things are not always going to go perfect, but there's no A's and B's. Sometimes, and I get it. And sometimes people want to, oh man, I wish it was a little bit smooth. Hey, you got it done. And that's the most important thing. Let's never forget the most important thing. There's no extra bonus for, closing quicker. There's no extra, oh my gosh, you're going to get flowers now, or the red carpet's going to come because you were able to get. It's about getting it done. It's not a perfect world. We're dealing with human beings. Things are going to happen. Let's just overcome the obstacles, figure out what it takes to get it done, and get it done. If it can get done, get it done, because then you start the clock. And time becomes your friend because you started the clock. And that's the thing. Sometimes people are looking for a quick fix. Besides fixing and flipping, and even that, it takes a lot of stress and a lot of time, more than sometimes people realize. Nothing is a quick fix. It's going to take time. And like I said before, real estate is a situation 10 to 20 years, you're going to see the power of what it can really possess for you. All right. So I wanted to get that out there. I didn't mean to just rag on you the people, but it's about being organized, getting our stuff together, and then let's go through this gauntlet together. That's why I wrote this book, though. I wrote this book, like I said, June 24th, 2002. I started in this business. I got the same questions. Dante, how much money do I need to bring to closing? Dante, what would be my down payment? What's my payment going to be? What documentation do you need? I mean, it really hasn't changed. You know what I mean? So that, these are still the same questions I get today. And so how do interest rates work? Hey, I heard the Fed just reduced rates. So now does that mean I get a lower rate? No. The federal funds rate is about HELOCs and car loans and credit cards. It's not indicative of the mortgage rate. Oh, I didn't know that. That's the same question I got in 2002. So, I mean, I'm trying to, thank you, YouTube and Facebook Live and LinkedIn, wherever you're getting this information. Thanks. Thank you for listening. But now it's my turn to make sure people know this stuff and know how to, when this information comes out, what do I do with it? I think a lot of times we're almost like deer in headlights. We get all this information every day. We're inundated with information. So much information comes our way. And then it's like, well, what do we do with it? I mean, what's my next step? And that's why you need professionals like me and others to help you move forward with the information. Hey, this means this. This means to move forward now. I talked to a customer of mine, and so she called me up and said, hey, I heard the Feds are going to be lowering interest rates. And so should we wait to move forward once they do that? I said, no. She said, no. I said, the market has already started baking in the anticipatoriness of the increase or decrease in the mortgage, the overall Fed funds rate. So we saw the excitement. We've already put that excitement into the market. We're already seeing rates go a little bit lower than where they've been. These are 10-month lows right now. Oh, really? Yes. Now. We live in the now. You have to live in the now. The NOW, I did a monologue on Friday, so I would encourage you to go to Epic Spotlight YouTube, check this one out. And I talk about the nows, the people that live in the now, and then the people that, not the right time, not yet, not yet and nows, and so check that one out. I took some time on that. I thought it was interesting. But, it's a concept, it's like now we got to live in now. I don't know what tomorrow's going to bring. I hope to be here tomorrow, but I don't know. I can't 100% guarantee that. But I know what now can do. I know what I'm doing now. I'm talking to you right now. All right. And so I wanted to share that kind of two cents. But we do have some questions here. Make sure on the comment line, just put a comment, hopefully that you're liking this. We will be back next tomorrow with Gilbert Freeman and Hazelwood. Marissa Hazelwood and Gilbert Freeman will be with me tomorrow. We have a nice conversation talking about old school versus new school, just on real estate and the market. Should be interesting. But let's take some of these questions here. What's the number one delay you see most often in closings? Most often delay in closings. Usually what happens at delay, that's a good question. Delays in closing normally come from not balancing. So what ends up happening is that we get it clear to close. Okay. Let's say we get it clear to close today. Today is Wednesday, right? We get it clear to close today. And, or no, excuse me, today's Tuesday. I'm already a day ahead. All right. We get it clear to close today on Tuesday. And of course, everyone wants to hurry, hurry, hurry. Let's close tomorrow. So we're going to send the figures over, right? The lender's going to send the figures over to the title company. All right. The title company is kind of like the middleman in that case. They get the figures from the lender, and then they have to get the figures from the seller. And once they have those two pieces, they're going to, kind of crunch all the numbers, put all the numbers together and say, here, funder from the lender, this is the right number. This right here. If you do this, if you match this, we balance. And what happens is lenders will not send out the wire until that actually takes place. So they're waiting to send out their wire until they balance. So what ends up happening is sometimes the lender's delayed in sending out their package to the title company. Sometimes it's as silly as they just have the wrong email address. Well, I'm sending, because these title companies are nationally, nationwide title companies, right? So some of them have maybe 8 locations in the same area. Obviously speaking in the Chicagoland area, if you talk about Chicago title, there's probably like 8 different locations. So, you might have the wrong location. Oh, well, it was going to start in Oak Lawn, but now it's going to be in Orland Park. Oh, it's going to be in Orland Park. Now it's going to be in Chicago. And that fluctuates based on when we can close. Oh, I was going to close in Homewood, but, actually Oakbrook will be closer for us. Whatever the case is. So this is a delay. Finally, once we get the right email, we send the figures over. Now we're waiting on the seller's attorney. In litigious states, we can't just 100% 1, 2, 3 go. We're waiting on the seller figures. And the title companies in, especially in Illinois, they're waiting on the seller's attorney. He's the one that's supposed to provide all the information. Now, he might be waiting on the listing agent to provide, commission statements and what have you. But, depending on his schedule, is he a one-man band? He or she, are they working by themselves? I know some attorneys still working by themselves. They don't have an assistant. They don't have any paralegal or anything like that. So they're, they might be in court. They got traffic duty, court, civil matter, whatever the case is. So now they, hurry, can we get these figures? They might not send them over until the morning. And well, we're supposed to be closing at 1. And now you just send them over at 9. Not to mention the title company has 2 or 3 closings, and now they're supposed to, go through their 2 or 3 closings and still balance these figures. And there's the delay. So wires will be delayed to be sent out to title companies. That's normally the reason why. It's that compilation. Like I said before, in Illinois, Georgia's about 9 people in a transaction. Illinois is 10. Your Michigan, your Marylands, your Floridas, your Virginias, your Colorados, your Texas, your Indianas, all are about 8 people. So it's just a lot of people in each transaction that can, definitely delay things. Do you think appraisal delays are worse in today's market? That's a good question, Adam. Thanks for tuning in. That's a good question. When we think about appraisals, we have appraisal scheduling. I would probably say no. I think they're no different. I mean, these are human issues. I took some notes on this. Appraisal scheduling and turn times. An appraiser takes a job. He says, hey, I will do the appraisal for 123 Cherry Tree Lane. Okay, great. And he does the appraisal, but, he has an emergency in his family. These are things that really do happen. What do? Do we wait for him? Because he already did the appraisal and we'll wait for him to write it up? Or do we say, no, let's pay again another appraiser to do the job? I've had appraisers get sick. I've had appraisers have COVID. I've had appraisers, have a death in the family. So I've seen delays from appraisals, throughout my career. It's just one of those situations that do occur. So, what we try to do is the best we can and just deal with it. I mean, it is what it is. That's why these dates on contracts are kind of projected dates, but that's not reality. The reality is once we have a clear to close, once the lender says we're good to go, then we're going to close, whatever date that ends up being. We're going to try to do the best we can to respect that date because we know that's a projected date that everyone's running towards. But at the end of the day, that date is irrelevant. If we're not clear to close, we have to get clear to close. We have to get the deal done. We have to jump through the hoops, make sure the lenders got what they need to make it an insurable deal, and then we can move forward. So I don't know if today is worse than others, but I would say just overall things can happen from scheduling, turn times. Sometimes you don't have a lot of appraisers in that area. So now, your turn times can be extended. I know, especially, in the heated situation like in Florida, it was just hard to find appraisers. They were so busy and backed up. So, I mean, there was constant delays just from an appraisal perspective. So it just depends. It does vary. Next question here. Do title companies play a bigger role in delays than lenders? It really depends, Mac. I appreciate that. I mean, I would say it just depends on the state. That's a state-based question. Depends on the state. Most, I hate to, poo-poo my Illinois title companies. I love, who I work with. And obviously my refinances generally are really good. But, I have seen, that outside of Illinois, Florida is excellent. Texas has been really solid. Georgia is good. Colorado, man, I mean, they're spinning it out. They're ready to go. They want to get it in, get it out, get it done with. So I don't think title companies are title companies, when they have the control, when the agents are passing, it over to the title companies are normally pretty good. Sometimes you'll see them understaffed a little bit. Obviously these are all small businesses, so they're trying to maximize the dollar. And so sometimes they don't hire as many people. That's sometimes what you'll bump into, where it's like, you have a 4-man, office, when maybe with the amount of work and volume that they have, they could really do it with 6 would be a little bit more comfort. But they've ended up, just accepting the route of, trying to do it with 4. So title companies can play a role in delays just on, their turn times. But I think it really delays come more from, the perspective of a lender getting a clear to close, sending out the figures, and then waiting on the information. So I think it's might be a dual situation. All right. Next one up is, what advice would you give first-time home buyers about delays? Yeah, I mean, let's get our documentation in order. We tried to send out, just a nice little note in the mail, actually. So I know some of these Gen Zs and millennials like, what is this, mail? Someone actually wrote this? Yes. I still write some things in the mail just as reminders, but, have your documentation order. Last 2 years of tax returns, last 2 W-2s, last 30 days of pay stubs, last 2 months of bank statements. That's usually standard practice before we still start unraveling what we have to do, what we can do to move forward. So getting that information up front is very important. It allows you to be organized. I can't tell you how many people, and they get so spoiled with this technology, and it's scary. I saw this Idiocracies. Has anyone seen that movie, Idiocracies? It was it was satire on the future of us, being so dependent on technology that we got to be careful that we almost become dumb. And we do have to be mindful of that, where it's just like, critical thinking, having documentation. We're so, well, I don't have any pay stubs. What do you mean you don't have pay stubs? They're on my phone. Some people don't even have the ability, and these are Gen Zs, don't know how to take it off their phone. It's like, well, and obviously I came from the day that everything was paper. And so I'm just so used to paper, but we have to have the ability to learn how to use this technology, be able to download your pay stubs, especially if you know that, hey, in the next year or so, I am looking to buy a house. We want to have the capability and the knowledge to say, hey, all right, I need to start accumulating this documentation. Where is it? Um, I see some Gen Z still asking mama. I was like, how old are you? Still asking your mom? Okay. All right. I love my mom too, but she helped me. She did help me in my 20s. I'm not gonna lie. But time to let go and time to be a man or a woman and take care of that business yourself. But definitely, start to, collecting documentation, come up with a plan, strategies. A lot of my monologues talk about strategies and plans and how to implement them and work with somebody, building out a financial team, someone that you can talk to, and someone that you feel comfortable with. And, so you can develop strategies. We just don't have plans, and I think buying a house, which is an asset, you're trying to build out a portfolio. I think you just need to have a plan. And, the plan doesn't have to be with me. It could be with another person. I mean, we hope that it's with Epic Mortgage. We hope that it's with Dante, but you got to find someone that you gel with, you feel comfortable with, and then make it happen. But, come up with a plan, come up with a strategy. What are your goals? I think we wait too long in life to start thinking about goals. We've allowed society to give us these milestones, these benchmarks, right? Get married, have kids, buy a home, eventually retire. But then it's like, well, how do we get there? How do we get there? I mean, that's what they give you, these milestones, but then they don't really show you how you get there. You just magically you bump into them. Oh, I met this lady, I've heard tons of stories. I met a lady at a bar. I met a lady at a wedding. I met a lady in school. Okay, but I mean, so these are milestones in life, but there are no plans or strategies that have been implemented to get there. I think we just need to be I'm free flowing. I like to be a little free flowing and let things kind of naturally happen organically. I understand it, but I think strategy comes critical. I think strategy is key. We want to make sure we have some strategies, especially when we start thinking about retirement. How's that going to look? Where do I want to live? What's my family dynamics going to be? I think all those things require us to do a little bit more sitting down, a little bit more writing, manifesting, those types of things. So let's come up with some ideas. Let's come up with some concepts, and then and let's make sure we have the documentation. Thanks. Next one up is how do you keep clients calm during a slow closing? Well, some of my clients would be like, yeah, what's he gonna say about this one? Jason, I don't go to closings. Okay. I have found over 23 years of doing this, I am best to be behind the computer. Now, I know some gurus would probably beg to differ and say I need to be at my closings, but I will say, before the pandemic, we always try to have a representative from at least probably the last 3 years before the pandemic. So 2017 to 2020, we always had a representative try to be at every closing we possibly can. I do find that to be important, just to hold the hand, keep them, keep everything going smoothly in case, something goes awry or something's a little quirky. But I have more ability for me behind the computers with my phone, with not everyone staring at me, where I can make sure everything is going smoothly from afar. But we are going to start getting back into having a representative at closings. I'm looking forward to that. And so we're going to implement that sooner than later. So how do I keep them calm? I've done the work. The work has already been done. I think that's the goal. That if you do the work up front, they know what their payment is, they know what the cash to close is. They have their cashier's check ready, or they're doing a wire, whatever. If the work has been done up front, then we should be fine. It should not be a big ordeal at closing. That's just, the aftermath of just doing the final stages, final touches. What's your go-to strategy for lender communication? That's a good question. And that's changed over time. I used to be, think that, hey, me calling and keeping the buyer abreast was good enough, and it isn't. Realtors, and to the point of that we've been making this whole conversation, there's 8 to 10 people, 8, 10 positions involved in every transaction. So with that being said, it's not good enough just for the buyer to be aware. There's other people involved, and they want to be aware too. So what we have to do, and what we're looking into doing, is definitely, by all means, is we're looking to, have milestones where we send out communication, mass communication to the group. To me, we're not against each other. This is not red versus blue here. Whether it's the seller, the listing agent, the seller's attorney, the buyer's attorney, we're all on the same accord because our end goal is to close the deal. For all of us, from the professionals that are involved, that's how we get compensated. From the buyer, they're looking to move on with their life and purchase a property. From the seller, they're looking to move on and go on about their life. So everyone's goal should be to close the deal. Sometimes we get this animosity or this, there's always sometimes a bad person out of the bunch, whether they got ego or, just a funky attitude that's really not necessary, because it's like our end goal is to close this deal. Let's all work together to close the deal. Sometimes deals, because delays from the borrower, is a situation that does happen. And we just have to give it time. It's going to go down. It's like, at this point in time, I got receipts. I got my receipts. I got my track record. I mean, you can look me up. You can Google me. I'm going to get it done. I'm going to get if the deal can close, I'm going to close it. If the deal can't close, it just can't close. And that's just the nature of the beast. And I'm going to do the work up front. I got them pre-approved. I feel confident in what we're doing, and we're going to deliver. And so that's the situation overall. We are going to, basically communicate the milestones. Hey, the appraisal was ordered. Hey, the loan got initially approved. Hey, we got it clear to close. Hey, we received the appraisal. Hey, the loan was submitted to underwriting. We want to keep people abreast of what's going on in the transaction so no one's lost. There's a lot of, I kind of work behind the scenes, and that's why, a lot of people haven't seen me. And they're like, man, I don't know what this guy does. I have a customer who likes to stop by now, and I've seen her like 3 times, which is, unusual in this day and age. They're like, oh, she's stopping by again. Okay. And that's fine. I mean, it's not a big ordeal. I'm not AI. I'm actually a real person, and I'm working on your behalf. The go-to strategy is to keep people abreast of milestones. Let everyone know what's going on, where we are with the file. Sometimes things get a little jammed up, and we try to do our best to get out of it. But it's very important that the buyer knows what's going on, and it's very important that everyone else knows, so we can all plan ahead and plan accordingly. I think sometimes we miss the focus. The focus should be all of us working together to close this deal on behalf of the buyer and the seller. I mean, that's what we're being paid to do. And that's what we're trying to do. It's amazing to me that we've been talking. I had to get my voice ready to go, but yeah, I've been talking, and you guys have been helping out with great questions. I really appreciate this. And the Epic Lunch and Learn is here for you guys, Monday through Thursday, 12 p.m. to 1 p.m. Central Time, 1 to 2 Eastern Time, 10 to 11, Pacific Time. It's here, and it's here to answer questions about the mortgage and real estate industry. It's here to give you insight so you don't feel overwhelmed. You don't feel like you can't do it. I know a lot of people have their own opinions about it. I was listening to the Patrick Bet-David show, and I know Adam Sosnick has his opinions about real estate, and which don't necessarily go side to side with how Patrick views them. And and I'm just a person that's been doing it. I've been helping people achieve their dreams for the last 23 years, and I feel confident in what I do on a daily basis. And I'm busy. I'm busy working on your behalf and trying to make it happen. And so if this is a dream that you want to have, if you want to be a homeowner, if you want to be an investor, I can help you. If you need to restructure your debt, if you need to, get cash out to start your own business, I'm here to help. I mean, I tell this story all the time. Epic Mortgage wouldn't be here today if I wasn't a homeowner. It's very hard to get business loans out there. Business loans are not easy. And if I didn't, if I wasn't a homeowner, this might not have never happened. Might not never. Is that a double negative? Yeah, it definitely probably doesn't happen. It's because of the equity that I have. So I'm always going to be a believer in the power of equity because, obviously, as long as I have good credit, as long as I pay my bills on time, I can access, money from my house to do things. And, going, because not everyone has an appetite, right? Banks don't always have an appetite for different types of businesses, right? It's hard to set up a cannabis shop, right? A lot of banks steer clear away from cannabis. A lot of banks steer clear away from real estate because sometimes you feel like you're thriving, and sometimes you're just surviving. There's cyclical, industries, and it's ups and downs, and sometimes the downs are really down. And so, these are situations that I believe holistically that, real estate is a great opportunity that everyone should take advantage of. Everyone should have a piece of the pie. Um, it might require some things different as we move forward, as the population continues to grow. We might have to maneuver some things. We might have to relocate, and we might have to be willing to do that. That's something that we would have to ponder. We can't always, do things the same way. We have to be accepting of things that might have to change. We have to constantly evolve. I always think about sports and that nature where they're like, you can't tell me the best basketball player is Michael Jordan. I mean, in everything else, we get better, but we don't evolve in sports. And it's an interesting concept. It's something I never considered. But we have to constantly evolve and get better. And so, that's my message to you guys today. I mean, there are going to be delays. It's okay. Work with a loan officer that has the experience, has the knowledge. Experience doesn't mean years. I do say 23 years. And I do say that just to give you some frame of reference that I've been doing this for a while, right? June 24th, 2002 was my first day. But I also talk about my transactions. These, and I think in the monologue I said, these aren't just transactions, these are transformations. But they're transformations in people's lives, right? Because it does change you to be a homeowner. There's a sense of accomplishment once you become a homeowner. There's a sense of I did it. And so there is a sense of, man, this worked for me. I did it. On to the next. And so that's why I talk about 1,300 families, individuals I've helped over the last 10 years. 1,300. That's not nothing to sneeze at. I mean, that's a lot of people. And I understand that. I've been very fortunate and blessed to help so many people out there and in all these walks of life. I've expanded past Illinois. So we have clients in Colorado, we have clients in Michigan, we have clients in Indiana, we have clients in Texas, Georgia, Florida. Just closed our first deal in Virginia and Maryland. So we have clients, around the country. I mean, regionally at least. East Coast, and I mean, do you consider Colorado West Coast? Is Colorado West Coast? I don't know. I mean, I think some people say that if you look at a map, Colorado is actually in the middle of the country. So I don't know how west it can be, but and I'll give you a side note. What's funny is, and people are like, well, are you going to go to California? Are you going to go to Nevada? And I said no. And they said, why not? Why not? Because most of the times when we're talking to people, and we're going to have a conversation about loan officers tomorrow with Gil Freeman and Marissa Hazelwood. But, the thing is, most times loan officers have to talk to you either at your lunch break, before you go to work, or after you go to work. So I had a scheduled appointment to speak to, I got a client in California, and he's looking to buy a second home in Texas. I was like, okay. And I was talking to his girlfriend, and I said, well, what time, can I talk to him? She's like, can you call him about 8:30 your time, 6:30, because that's when he gets off of work. And I was like, 6:30 his time? That's 8:30. I'm tired. I've been working since 8. We're going past the 12-hour workday. My goodness. And I'm just not as sharp, maybe, at 8:30, after a 12-hour day, and it's just like, ugh, I gotta still be on the phone. I can still talk to this guy. And what was funny was I actually called, and have you ever done this where you call but you pray they don't pick up? Please don't pick up. Please don't pick up. Please don't pick up. And lo and behold, God must have heard me. He didn't pick up. I left a message. So we'll find another time to speak. But, I was like, God, I'm not in the mood. So does that happen to you? Because that happens to me. And that's just real. That's just being real right there. So, yeah, delays. Obviously, we have borrower related delays, lender related delays. Sometimes there are, underwriting backlogs. Sometimes slow communication, changes in guidelines can occur. Sometimes, like I said, we get caught up in a situation where we get so busy, but we don't have enough people. We're just understaffed. That can happen. Appraisal delays. Those are issues. Obviously, if a value comes in low, will trigger a dispute. Title issues, usually ownership disputes, or what is that? When you have the probate court, liens, HOA document delays. Sometimes you have condos and townhomes. We have to order HOA documents. Not every HOA will actually fill out these questionnaires or forms. We have to, they all have like third party people because they don't want to do that every time. And some of these third party people are simply put, they'll like, hey, it'll take us 2 weeks to get this to you, unless you give us $1,200 or some crazy number, and then we can get it to you in a week. So, sometimes there's delays in that regard. Negotiation tactics, negotiation stalls, inspection issues. Is the seller going to do the work? Is they not going to do the work? Repair concessions that push timelines. So there are tons of reasons why things can get delayed. Those are just to name a few. But yeah, we have to deal with them. The purchase contract gives you a projected date. But at the end of the day, we're going to close once we have that clear to close. And that's what we're all gunning for. And we should all work together, kumbaya a little bit. We all work together for the common good for the buyer and good for the seller. We want the seller to move on with their life and transform into what they're looking to do. And same with the buyer, change their life forever, become a homeowner, and hopefully have that opportunity. Well, this hour has been up. Thank you so much for listening. Appreciate you. I'll be back tomorrow with 2 loan officers. We will talk about old school and new school loan officer good stuff, and we'll take it from there. Everyone have an epic day. Thank you.